Hi traders, in today's video we're looking at how to know high probability point of interest, and these are things you should be able to identify to make money in the forex market. Now, what do I consider as high probability point of interest? Which order block we hold, which is a fake order block, which supply zone we hold, which is a fake supply zone, and so on. With these lessons, at the end of this teaching, you'll be able to identify fake order blocks and how to know the real order block that will hold price. Now I'm going to look at this in form of order blocks, IPA, and then supply and demand. So I will try my best to trade on these three scenarios. So stay with me. If you are new to this channel, make sure you subscribe, hit the bell notification, so that once I release content like this, you will be the first to be notified, so that you won't miss any content. Okay, so let's start. We have different scenario here. Now with this move, these are impulse legs that have broken structure. Okay, they've broken structure one way or the other. Now we want to trade the OBs, okay, the point of interest. Now, what makes your point of interest valid? Your point of interest is valid if it has fair value gaps below and at least must have taken liquidity. Okay, must have taken liquidity. So in this case here, which is your point of interest? In this case, we have fair value gap here. We have fair value gap here. And now let's assume all of these are in premium zone. Okay, nothing like discount. Now let's assume it was a premium zone. Okay, market broke structure and is trading back up. Where do you want to take your trades? Fair value gaps, as you know, I'm not really a fan of it. Now the reason why I look at fair value gap is to validate my point of interest. Now this particular order block or supply zone is a fake supply zone or fake order block. Why? Because it did not meet the two criteria. Okay, the criteria are: one, sweep liquidity, and two, must have fair value gaps. Okay, these are the only two you need. Very simple. In this case, it has the first one. There was fair value gap, but it did not grab liquidity. Okay, so in this case, this is a fake order block. So once price comes back up here, when price comes back in there, those that trade fair value gap will be washed. Those that try to think this was an order block to trade because the last bullish candle before the bearish move, or those that trade supply and demand, price might reject a little and then move up, taking them out. So what do you do? Now I know there are some traders that take trade in all of this. Also they mark this and they mark that. Fine, if you are doing that, it's good, but it will be better you eliminate this loss, because when you take in a loss, it has a way of affecting your psychology as a beginner trader. Now in this particular scenario here, we have the last move. The last up move is not just the color of the candle. Okay, it's the entire candle that started the move and the ones that ended it. So this move from here to here is your high probability point of interest. Okay, the moment price comes in here, there's nothing wrong for you to take your trade here. But as I know, a lot of smart money traders like to refine. Okay, now the best way to refine is this. Why this? It has a fair value gap. Okay, and it took liquidity. So in this case, or this is a high probability zone where you can enter your trade to take the market down. So in this case, the market comes up, tap into this zone, and then move to the downside. If this was to be on a higher time frame, you can then switch to a lower time frame to also look for a confirmation for a better risk to reward ratio. Now, there are some traders, smart money traders, that will only mark this blue candle here. Okay, they only mark this and they trade here. This is wrong. You don't need to be doing this. Okay, you do not need to be doing this. What you need to be doing is extend this to this point and you are okay. Okay, so this is the first scenario here. Now the second scenario, we have this situation. We have this move to the upside, the order block, and then market continue going down. Now when market is coming back, a lot of traders will mark here as what? The point of interest. They want price to come back because this is the last bullish candle before they move down. And market will do this. We move up in here and then tank goes south without tapping into their order block. If this happened to you, put it in the comment section. Why this? Because this zone was never a high probability zone. Why? Because there was no fair value gap. Yeah. Even though it took liquidity, no fair value gap. This is your high probability entry. So sometimes the extreme is not always the high probability because most people will wait for the extreme. If price breach this high, maybe you enter a trade and took a loss, this extreme will not hold. Will not hold because there's no form of imbalance here. So that means all of these are price efficiency, price we seek above. But most times price will repel, will be rejected from this POI because this is your high probability POI. High probability in the fact that it took out liquidity and it also created a fair value gap. Okay, so in this case, this is your liquidity of high probability point of interest. Now, this to me is an order block or is an IPA candle. An IPA candle is a candle that closes the imbalance. I did videos and videos on IPA candle. I'll put it in the card and check the description. You're going to see to learn more on that. And also on order blocks, I gave the rules you need to be looking for in an order block. I will also link the video somewhere up here or check the card and description below. So the last scenario I will explain here is this third one here. Okay, in this case we have the extreme order block here, took out liquidity and then probably broke structure, remember, and that's fair value gaps. So when price comes up, okay, comes up, you can then sell to the downside. Okay, this is high probability because it met these two criteria, both bullish and bearish scenarios. So let's look at the chart. This also applies for a bullish scenario, but I don't want to waste more time on that. So let's quickly look at the chart. In this case, this is the monthly time frame. Okay, market is fractal. Okay, I'm shooting this without planning much. I only drew this out this morning. So now you see this movement here, went down, broke structure. These are all high probability zones you can be using to enter the trade. Okay, these are high probability zones you can use to enter a trade. Likewise, this as well, took liquidity, there, fair value gap, liquidity sweep, price came up, but you can see it didn't take that liquidity and price went low. Let's go to the 1 hour so that it won't be, oh, the monthly respect levels a lot, while the lower time frame do not. Now you only apply this if you are in the right direction of the market. Okay, like for example here, where this wasn't an high probability, but in this case here, someone will want to buy here just because it broke structure. There was no liquidity here. In short, you can see this other one here even respected price a little, unlike this one. Okay, this one even push price upside a little, but it's also a wrong zone because it didn't take liquidity. You can check and check and check and check. Now let's say 4 hours. I don't want to bore you with screen movement. Okay, like in this case here, you can see this is a high probability here for a sell. Why? It took liquidity, created imbalance at first, and until price came in. Now all this price now needs to be taken because they are all inducement. They are all inducement. Price came back up and cleared that high. If you go to the Euro USD example here, the same thing. This was trade I took yesterday during the non-farm payroll. Maybe when you are watching this will have been days ahead. Okay, so you can see fair value gaps. Okay, and this is the order block. A lot of people will wait for price to tap to the extreme, but in this case, when you look at it, price tap in. Okay, there is a fair value gap in there. Look at it there, very small. Tap in, that makes it valid. The moment if there's no fair value gap, then I'm sorry, it might be your case. So price went lower. Yeah, now I explained in some other video why you should not be trading here, even though it has all the characteristics of an order block or a high probability point of interest, but because of liquidity inducement, this is fake as well. So because you are seeing any candlesticks that take liquidity and also have a fair value gap, do not be trading them. You must combine them with pure liquidity concept, in-depth analysis of liquidity. Okay, because it has those two, you now say, oh, let me start buying and selling. No, like this is a high probability buy. Why? You can see this last candle, this blue candle took liquidity. Okay, and then there's imbalance here. Price went up before going lower. The same thing here, you can see here, imbalance. We have an IPA candle here. Price move lower. Now this also is good. It's good here. You can sell, but if you have a bigger picture, you know that this is an inducement. I did a video on that. So this is an inducement. Price needs to clear it, and price indeed cleared it. And also looking at this, you say, oh, let me sell. It has all the attributes. No, it's sitting at liquidity zones. So you need to back test this, practice it so that you understand. But if you want to quickly shorten your learning curve, I've opened up VIP membership for the community. It only costs $50 for the first month. After that, it's $97. So make sure you reach out to me via the description. You're going to see VIP membership. Join the Telegram and then shoot me a message. I will onboard you in. I give trade signals in terms of setups, not signals per se, setups. And then every Sunday we do live workshops. And then during the week also there will be training for those that are new to the forex market, and you'll be learning things along the way. And don't worry, even if you missed the previous week, there are recordings available for you. The moment you come in, you can consume those content and then try to sharpen your trading sword. So that the goal is, I want us all to be succeeding together as a forex trader. So if you want to know more on smart money concept, I'll see you in this video.